Hey everyone, Roku delivered a quarterly investor update on November 1st that had the stock price jumping 30% on the day of the announcement. So in this video, I'm going to review Roku's investor update, the quarterly earnings report. I'm going to answer if that stock price increase was justified, and I'm also going to update my recommendation of Roku stock. Coming into this quarter, I had Roku stock rated as a hold. You're going to want to tune in to see if I'm upgrading this recommendation to a buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's get started with Roku's quarterly update. Starting with management saying they grew total net revenue 20% year over year through strong performance in content distribution and video advertising, along with the unit sales of Roku branded TVs, which launched in March 2023. This is something I was excited about with Roku. I wanted Roku to get into this part of the business because in comparing Roku's operating system with other TV operating systems, namely, let's say Sony and LG, Roku's operating system is much better performance wise comparatively to the others. So I thought it would be a good idea for Roku to enter the TV manufacturing business instead of partnering with other distributors to get their operating system as the main operating system on the platform. I think this might work out well for Roku, but there are some risks with that, which I will highlight a little bit later on in the video. So let's move on. Active accounts for Roku were 75.8 million in the quarter. That was a net increase of 2.3 million active accounts from the previous quarter. Remember, that's how Roku makes its money, by getting people on the Roku operating system. Once you're on the Roku operating system, Roku makes money when you purchase subscriptions through Roku's operating system. It gets a percentage of revenue from those subscriptions. For instance, if you buy Netflix through the Roku operating system. Secondly, Roku makes money when advertising is shown while you're on the Roku operating platform. So Roku, once it gets you in the operating system, every time you turn on that TV, it's likely that Roku's going to make money from your viewing exposure, right? So that's where Roku's business model is extremely lucrative, is that once it gets you in that system, it can generate revenue from you for several quarters, several years, going into long time into the future. So the average revenue per user came in at $41 over the trailing 12-month basis. This was down 7% year over year, and I'll talk a little bit more about why that was the case in the video. So Roku breaks out its total revenue and total gross profit between its platform segment and the device segment. The platform segment is once you're on the Roku operating system, everything that happens from that point onward is going to be considered platform revenue and platform gross profit. Inherently, that segment is going to be more profitable than the device segment, right? That's usually the case with many companies where the services side of the business is more profitable than the hardware side of the business. For example, you look at a company like Apple. When it sells you an iPhone, the average profit margin in that segment is around 32%, the hardware segment for Apple. Whereas Apple's services segment is upwards of 70% gross profit margin. So when you buy Apple Music, for example, it makes twice the profit as when you buy an Apple phone. The incredible thing about Apple is that it generates over 30% gross profit margin in its hardware segment. And then once you're in Apple's ecosystem, it generates substantially more profit margin from your exceeding transactions. That's the point Roku is trying to get to. However, Roku's gross profit from the device segment has been negative for a long time, and it's generating significant negative gross profitability. I'll highlight that here. So you could see its total gross profit from its devices segment, the gross profit margin in the third quarter of 2022, negative 15.8%, negative 32%. It had one quarter of positive 3.4%, then negative 17, and in the most recent quarter, negative 7.5%. So Roku's willing to absorb those negative profit margin because once it gets you on the platform segment, that segment is lucrative with gross profit margins above 55%, 52%, 53%, and 48% in the most recent quarter. Although the drop below 50% in the most recent quarter was due to restructuring charges, going forward, it should, I expect it to be above 50% again. But notice how Roku has to absorb a loss to get you onto the platform, to get you into the ecosystem, and then it can generate profitability from the user when it goes on the platform. The incredible thing about a company like Apple is that it generates a profit when it sells you the phone, and then it generates even more profit from your activity on the phone. So the first phase of Roku's business model is to build scale by enabling households to watch TV with the best experience using Roku streaming devices, including licensed Roku TV models, Roku branded TVs, which are designed, made, and sold by Roku, and streaming players, right? It's a streaming enabler. It's benefiting from this trend of people canceling their cable subscriptions, their linear TV subscriptions, and switching over to consuming content from streaming. Already, the Roku operating system was again the #1 selling TV operating system in the US, and I would say the reason for this is because how effective the operating system is and how well it works, right? When I go out and I look for a TV to buy, right now I make sure that it has the Roku operating system because I definitely don't want the LG operating system. Does not work well at all compared to the Roku operating system. And so TV viewers have come to trust Roku's operating system over these last several years, and now they go out and they look for TVs that have that Roku operating system installed. And customers in Mexico are realizing the same thing. Now, the Roku operating system was the #1 selling TV operating system in Mexico. And they're building on to their expansion in Latin America and their announced TV models in Chile, in the UK, and they're going to continue to expand internationally. And I don't see why Roku cannot continue gaining traction internationally because the operating system just works so well, especially when you compare to rivals. It's no question that Roku is the best operating system. Global streaming hours on the Roku platform increased 22% year over year, while viewing hours on traditional TV in the US fell 15% year over year, according to Nielsen. This plays to what I mentioned earlier. People are canceling their cable subscription and switching to streaming subscriptions instead. It's just so much more convenient, and I doubt this will ever turn around back in favor of the linear connection, because why would you pay more for less convenience? It just doesn't make sense from a consumer perspective, and so I suspect streaming to continue to gain traction worldwide. So in addition to running the operating system, Roku also has a channel, the Roku Channel, where it offers viewers free viewing. So you can just get the Roku operating system and just watch the Roku Channel for free without having to pay anything. It's ad supported, and according to Nielsen, the Roku Channel remains a top 10 TV streaming app, and it represented nearly 3% of all TV streaming in September, which is comparable to the engagement of Paramount Plus, Peacock, and HBO Max across their platforms, right? So people are finding Roku Channel attractive, and they're finding that these content on that channel is worth watching, especially because it's free. And Roku continues to add more content to that channel, and it wouldn't surprise me if they can attract even more. In fact, a popular YouTuber, Mr. Beast, recently signed on with the Roku Channel and now provides content to the Roku Channel. And in this way, Roku can continue to add content to the channel by approaching content creators and offering them maybe a revenue share agreement, maybe an upfront fee. Re, Regardless of the terms, Roku's finding success in attracting content to the platform because of its undoubtedly massive scale with over 70 million active accounts. Fortunately for Roku stock investors, management expects more of the same in the fourth quarter, more growth in revenue. The company said it had a solid rebound in video advertising in the third quarter, and we expect year-over-year growth rate of video ads in Q4 to be similar. For the fourth quarter, they expect total net revenue of roughly 955 million and total gross profit of roughly 405 million. So this wasn't just a one-time thing. Management expects the good times to continue into the fourth quarter. So here is the reason why I think Roku's stock price jumped as high as it did, and I would like to see more of this here. So when I'm looking at Roku's cash flow from operations, you can see that Roku generated a substantial net loss in the 9 months that ended September 30th of 631 million. That was up from 260 million in the same 9-month period the year before. But many of these costs were non-cash expenses, including stock-based compensation of 277 million, amortization of content assets of 154 million, and the impairment that I talked about in restructuring earlier of 235 million. These are all non-cash expenses, which led the company's net cash from operations to increase meaningfully to 239 million compared to just 4.4 million in the same 9-month period the year before. So I would like to see a continuation of this trend before I can recommend Roku stock as a buy. But it definitely made considerable progress on this front. I just want to see at least one more quarter of continuous progress in this front before I can say, okay, Roku's got itself back on track and it's back to increasing its cash flow, approaching closer to profitability on the bottom line. But I certainly understand why Roku's stock price was up 30%, because it was heading in the wrong direction and it turned things around in the current quarter, mostly because of a turnaround in the advertising industry. Ad spending increased and Roku benefited from that trend, and ad spending increased across the board. If you followed my videos on Alphabet mentioned that advertising on YouTube and Google increased. Meta Platforms mentioned that ad revenue increased for them. Snapchat, Pinterest, all these companies that are supported by advertising revenue experienced a much better than expected quarter when they announced earnings, and Roku was another one of those companies that benefited from that trend. So I want to see another quarter of solid performance before I can recommend Roku stock as a buy. So for now, I'm keeping Roku stock as a hold, but I'm moving it closer to a buy. It's getting closer to the borderline because this quarter was so impressive and the progress it's made in gaining traction internationally. So for all those reasons, I would say Roku stock still a hold, but keep a close eye, add it to your list. It's certainly an attractive stock with excellent long-term prospects. But before I let you go, if you've gained any value from this video, please subscribe to the channel. It really helps support videos just like this one. Without viewers like you, this channel wouldn't exist. So thank you so much for watching.